Now, I heard ICT say this in a video a few months ago, and ever since then it completely changed my trading. What's up everyone, and welcome to today's new video, where in this video we're going to be going over the only two things that price does. Let's start by defining what these two things actually are, and the first one is trade to highs and lows, and the second one is trade to imbalances. So for example here, if you look at this price action, price trades up above this high, which is trading above highs or lows, and then trades back into this imbalance. Then price trades below a low, leaves an imbalance, price trades into the imbalance before trading below a low again. So when I learned this, it completely changed my trading and the logic behind my trades, which is a big part of what ICT teaches. So in this video, we're going to be going over that and how you can also incorporate this into your trading. Now, before actually diving into an example of how I simplify the market down to these two terms in terms of only taking lows and highs and only taking imbalances, I want to actually point out that an imbalance in price is not just a gap like you see here between these three candles. It's not just a normal fair value gap. An imbalance in price can be a volume imbalance or an actual gap like this one here. It can be even an order block is by technicality an imbalance. So we only rebalance the market and trade to highs and lows. Keeping that in mind, today we're going to look at this setup. Now I want you to note these lows down here, and if we look at our ES chart, as you can see, notice something between this candle and these candles. If we flick back to NQ, notice how NQ actually goes like this. So this candle takes the liquidity out of this candle, whereas ES, which is its correlating pair of course, doesn't. So ES makes a higher low, whereas NQ makes a lower low. Now going into 9:30 open, which is what I use for Judas swings, as you can see, the 9:30 open actually was the one that traded below this low, and ES obviously stayed above it. So that gave me my SMT, and that made me think price was going to head higher anyway. I did want to see it trade into the 1 hour actual gap. So notice how we take a low and then trade into an imbalance. So I have in mind, I want to see price trade into this gap. We have relative equal highs all around the gap, and then we get our SMT. Now diving into the actual 9:30 open, as you can see we opened up here, dive lower, had our SMT with ES, and then as we started to move up, I want to zoom into this bit of price action here. Now this may not look like a lot, and it may actually look choppy to some of you. However, this in about 7 minutes of price action tells me a lot. So we have a down close candle, price moves above the down close candle, which takes out liquidity over here, now becomes our order block. We trade above it, tap back into it, respect the body of it, close up here, and then price opens up again, taps into it, closes above it, taps into it a second time, closes above it again, and then on the fourth candle we tap into it and run. That's 3-4 times we've respected the order block here within about 4 or 5 minutes. As soon as it got respected about 2 times, I bought off of this order block, and I'll throw the execution up somewhere around here. I bought off this order block aiming for this consolidation up here. Now, I want to take your eyes and attention to up here. We have highs and we have an imbalance in price. Imbalance in price, trade higher. The market immediately rebalances the next candle. So we have this wick traded through, and then the next candle reaches down into the wick and then trades higher, clearing out the original consolidation. Now all of this price action isn't a coincidence, and these are the things I refer to when talking about signatures in price. So think about it. We traded below old lows, traded up above a what? This is a high. broke market structure, traded into the order block, which is technically rebalancing the market. We trade higher, immediate rebalance of the next candle, up above highs, and these highs up here, and then trade to an imbalance and reach higher into the gap. So this is just one example of how your understanding of the market can allow you to actually frame trades around this original understanding. If we understand that the market only trades highs and lows and imbalances, then with a bias in mind, after we sweep liquidity, by technicality, we should rebalance price before moving higher. Now taking you down into the second example, as you can see, we're on Euro USD. We have a market maker sell model example on this one. So we have our original consolidation, return to consolidation, accumulation, and then smart money reversal. I want to take your eyes to this bit of price action around here. So once we break past the low, what do we expect? We expect price to trade into an imbalance before heading lower. And within this price swing, so from this high of the smart money reversal to this low down here, I want you to pause the video and actually point out the imbalance in price in here. Now this one's a bit harder as it doesn't look like an actual fair value gap, but there is an imbalance in here. Now giving you time to pause the video, I will point it out to you. So we have an inversion gap here, which as you can see gets mitigated to the pip. And we have a rebalance redelivered price range, which is when this candle trades low, delivers sell side, buy side, and then the next candle delivers sell side again. So between this candle's high and then when the third candle's formed, we take that area and use it as our imbalance. Of course, we can always use the inversion gap here, which is valid, and notice how that one is very accurate to the pip before moving lower. I like to use the rebalance redelivered just because if you're entering off of this gap and it trades into it by the pip, your broker may not put you in and you wouldn't be in the trade. So we use this PD array, rebalance and imbalance, and then what do we have here? We have old lows which are now traded through, price moves lower, and then we clear out the consolidation below here. Now for the final example, I want to show you how this simplification of the market can actually make things so much easier when you boil it down to just this. So a lot of you may be chasing a breakout here, but I want to use this theory of highs and lows plus imbalances to actually change what you'd be thinking about the market to give you a more accurate target. So once we have this huge swing up here on the daily chart above these highs, remember we want to trade above highs and lows and then rebalance the market. So we trade above this high and then we take this price swing from the low to the high, and I want to see price trade into an imbalance within the discount range of this market, and obviously flips on its head a premium range for sells if we're in a bearish program. So now I want to see price come from up here above the high and then trade into at least 50% of the range before heading higher for a continuation. Now below the 50% level here, I want you to look at this and see which imbalances are the first you see. So the first imbalance below this 50% range is our target. Now your eyes should draw to this small fair value gap inside here. Now, it doesn't matter how big or small the fair value gap is, just the first imbalance that is in that swing of the market is the one we need to be aiming for. So we have our target when we're up here now. We look for price to trade down, we get a leg lower here, and then what does price do? Price rebalances before trading to the low here. So all of this is tying together as you move on the larger macro scale. So our smaller intraday moves as we trade into this imbalance on the hourly chart or the 15-minute chart, for example, we can have this in mind as we trade into the imbalance, look to trade to the new low. remember imbalances to lows or highs. We do the same here, imbalance again. If I get rid of this, make this imbalance clear for you. As you can see here, we make another gap. And notice how we left 3 swing lows here. Low resistance liquidity run, we trade into the imbalance before trading lower and ultimately trading into our longer term target. So all from this, trading above a high and then looking for an imbalance in a discount range, all of that ended up giving us a bias for about a week or 2 weeks of trading. And then we take these little intraday moves, and that is how we frame our trades on the 15-minute or hourly chart for our intraday traders. So if you did enjoy this video, please do leave a like and be sure to leave a comment if it helped you. You can find my socials linked in the description. I'm always posting on there even more content and breakdowns of any trades I take. And I will catch you in the next one. Thanks for watching.